Hey everyone, Alex Wilson here, Kyle DeVigi. We're back with our weekly chats. We're going to let you know what's happening in the real estate market now and what we expect tomorrow. Hey everyone, welcome to this week's weekly chat. Alex Wilson here, team lead for alexjwilson.com, and we have Director of Operations Kyle DeVigi for Remax Wealth Builders Real Estate. So you may all have been wondering, where have we been? Well, in mid-March, when the market began shutting down, it was, what's going on? And we had to adjust our business to adapt to the changes. And truly, no one at that time knew what was going on. So we took a different approach to everything. Obviously, we readjusted our business-wise, but we took it as an opportunity to sit back, listen, and watch because, again, we didn't want to give misinformation out, panic information out, because no one knew what was going on and what the results of everything have been. So what we focused in on, listening, watching, reading, researching, following trends, as well as we took the opportunity at the time to educate landlords on how to deal with tenants during that period. So throughout the month of April, we did educational webinars with a top paralegal, Elaine Page, helping landlords understand, okay, if I'm having trouble with my tenants, what can I do? So we spent all our time helping and being in the moment wise what people needed. They didn't need to hear what was happening in the real estate market wise, because as we always say, real estate is a long-term game. But now we're about 6 weeks through this, and we can talk more about, okay, what's our new normal? What's our new situation wise? And we have some statistics wise of people that are choosing to transact at this time, what's going on in the current market wise. So first off, we've been looking at what's been going on downtown, and very specifically our own flattening of the curve. What our flattening of the curve looks like in regards to real estate sales. And we're just looking at real estate sale activity. So over the past 3 weeks, we saw a constant decrease in the number of sales when I looked year over year. And that decrease started at 78% mid-April, then that dropped down to 76%. And when I looked at last week's sales activity, dropped 73% year over year. But during that same period wise, we also saw a decrease in the new listings coming on the market year over year. So in regards to we had a decrease in the demand wise, but we also saw a decrease in the supply coming into the market. So we didn't have a flood of inventory just sitting there on the market wise. Now we saw a decrease in new listings in a range of 50 to 60%. So there is a supply that's building up, but not a dramatic supply increase, because ultimately, who wants to list their condos right now for sale? I've been telling clients, unless you need to sell, you shouldn't be on the market in those times. Now, what we've seen in our flattening of the curve for real estate wise, then we started looking at week over week sales. Okay, what's our week over week sales decreases wise? So we looked into our mid-April week over week. We saw a decrease. The previous week we saw, so just 2 weeks ago, we saw a decrease of 6% week over week. And then now this just week that just passed, the week over week, we've seen a 47% increase in firm sales wise. So people have changed their activities. They're reacting to the new normal wise in the condo market and what we need to do to transact wise. Really for the month of April, because we are now into May now, and that's where we see that jump wise. For the month of April, no one knew what was going on. So that's where we saw a dramatic in regards to sales wise, because everyone was on the sidelines. No one knew what was going on. Now we're seeing a gradual pick back up. Guess what? Every day when you wake up, the sun is still shining. There's air to breathe. So people are reacting to the new normal wise, and people are more willing to transact wise in this new reality, because Maslow's hierarchy of needs, Kyle, what is one of the number one things that people need?
Shelter.
They need shelter. They need roofs over their heads. So we've bottomed out. We've come. So we're gonna throughout May, we're gonna see a gradual increase in the sales activity wise. We're gonna go nowhere near previous sales. When I looked at last week versus this weekend, 73% decrease year over year wise. My week over week numbers have increased. So that's the good news. But again, you're not going to see a rush of new listings coming on the market wise, because people are not going to be transacting. So that's really, really important wise. From the leasing perspective, I would say the leasing market has been hit harder than the resale market wise, because the leasing market is always much closer aligned and correlated with incomes and people working. So we've seen year over year decreases wise between the 50 to 60% level in regards to the amount of lease transactions completing wise. And we've seen active inventory increase over 250%. And there's some other things that are happening in the market that are causing the increase in inventory at this time. So what we've also had happen is with Airbnb, the Airbnb market has been devastated. Obviously, there is no one coming in and staying in these units wise. So we've seen Airbnb specific buildings a dramatic increase in listings. So for example, 12 and 14 York Street wise, we've seen over 120 listings for lease in those buildings. 300 Front Street wise, over 50 units for lease in those buildings. So we have the shock to supply in these buildings wise. At the same time, we're having a decrease in demand. So we've definitely seen a softening of the rental market wise. And on top of that, we have issues in regards to even showing these properties. So forget about the issue showing a unit for sale wise if an owner is living in it. How are you going to show a tenanted unit when someone's living in it? A, the tenant really doesn't want someone else coming into the unit, which they can prevent that showing coming in. And B, the prospective tenant, do they really want to go into a unit when there's someone else living in it? So from both sides, it becomes very difficult to show that unit, a tenanted unit, because no one wants someone going in and no one wants someone going out. And then on top of that, buildings are restricting access to them as well for real estate agents. So a lot of factors impacting the leasing market right now. And we're down to 2019, early 2019 pricing wise on the leasing market wise. So this year we're gonna definitely see an increase in the vacancy rates on the leasing side, and we're gonna see a decrease in the average pricing on the leasing side. Now the good news is that is all temporary in a short term perspective. So why we're seeing increasing vacancies and on the leasing side is that our borders are closed. No one can get it. No one can get into the country right now. So you're seeing decreasing activity on that end because literally people can't come into the country. And number two, as we come into the summer market wise, there is a huge area of demand that typically comes during the summer that there's a good chance, well, I would say that will be impacted regardless of what happens. The level impact could be 100%, it could be 50%, but the international student population that comes every year to study at our world-class educational institutions, if those aren't open back up, those students aren't going to be coming because there's no institutions for them to attend classes to. So if our borders aren't open, or the institutions aren't opened up, then you're not going to have those students coming in filling those vacant units. So that could have a very big impact on the leasing market in the short term. in the short term. So the leasing market looks to be soft throughout the year in 2020. Now, if the borders do open up and the institutions do have some sort of modified schedule wise, we will get some of that population, but I can guarantee you're going to see a decrease because there may be restrictions within their own country traveling wise, or maybe there'll be restrictions within our government wise, allowing certain countries in, certain countries not. Maybe some people don't even want to come in this age of uncertainty wise. So you're going to see a decrease regardless. If it's 100% or if it's a number lower than that, we'll see what that is. So we do have definitely short-term issues on the demand side, but again, they're all short-term. What we do know is that when we look at our medium and long-term prospects-wise, nothing has changed. Nothing has changed in regards to the supply issues that existed in the Toronto market. Now we're looking medium to long-term. We may have an acute short-term issue in regards to, okay, there is supply, but in the long-term, the same issues still exist. We are still a very attractive place, and I would argue an even more attractive place versus our neighbors to the south for people to choose as their location for immigration. Toronto is still the economic capital of Canada wise. We are still a high-tech hub, and Kyle's going to get more into that. Even from the aspect of people are going to want to live even closer to work because they may not want to rely on public transportation. They want to be able to rely on their two legs. They don't want to be in those confined spaces. So that is something we know as well. Another item which is going to happen, and I know this because we spent April listening to professionals all over and my colleagues, there'll be increased activity of actually people leaving the city now. There will be more people moving out of the city now. So one of the impacts of this is there will be more people that have the ability to work remotely wise and may be able to reduce the amount of time that they go to the office, and they may choose to go to a more affordable area and work from home. Now, I also will say this, as a father of two young children, and I've spoken to my fellow parents of two young children, I do not want to work from home. I need to get away from the children. I have a virtual background right now because I'm stuck in a hole in my basement because it's the only place I can get quiet to do my work wise. I
think that's a great point, Alex. Many of the people out there are just not set up with work from home offices or environments that are going to allow them to really work from home. It's just not an option for many people.
No, and this is going to force some technology, some positive change. There are going to be some great positive change, and Toronto, with its high tech sector wise, is at the forefront to take advantage of these positive changes that are new efficiency wise that are going to work into it. And I'll divert back to Kyle, who's Kyle's wife, is someone that has commute issues, and this is probably a positive for her in regards to this, right? Can you give me some of Kim's perspective on this as someone?
Yeah. No, exactly. Instead of commuting out to Mississauga every day, she's now able to work from home. So instead of spending an hour in the car, she can spend an extra hour on work, so her work benefits, and then spend an extra hour, with me at home. So in this situation, she has an environment where she can work from home, but still achieve, good efficiency.
Yeah. And it'll be, again, I'll go back to Kim wise, because I know she had a lot of international travel. I imagine this has allowed them to tweak their efficiencies in regards to international meetings wise, right?
Well, it's forced them to go completely digital. But one of the things they found is when they can get everyone in a room physically, they tend to be much more productive and move forward much quicker than any remote conference call or video call.
And people learn that too. So that's where it is. And there's still always going to be reasons for in-person meeting wise that interaction with individuals and everything like that. That's not going away. And I know I speak to another friend of mine. He's a senior level position at one of the top REITs in Canada wise. And he echoed that point. He's like, for me, this is just hammers down the point of there's huge efficiencies of being in the office wise to actually get things done. So there, I think it goes both sides going, okay, reinforces what you need to be in the office for and what you don't need to be in the office for. And you get to build those walls and you're getting rid of that gray area. So these are some of the positive things that are coming out of that. And I think that Toronto is going to benefit hugely from, because we have the infrastructure and the tech incubators and thought leaders in this area to think of more efficiency, build more technology around that and everything. So that's these are all the good things that will come of that.
So on that note too, Alex, unfortunately, you're not able to video conference into a dinner or arts and culture. You still need to be close to those things, which is why location continues to be so important.
100. Yeah, you know what? I'm glad you brought that up. I was thinking about that. I wanted to talk about that. So, you know, I just said that people are going to be, some people will leave the city and because they have the ability to now. My wife and I, Kyle doesn't even know this. My wife and I, we talked about it, and we drove to Mineola and did a drive by and said like, oh, is this a place that we want to live in, get some more space and everything like that. And when we got home, it's like, no, this is home. We have the ability to walk around the area. There's lots of people on the streets. We have sidewalks. That was very important. The one thing she noticed, there was no sidewalks there. You know, we have sidewalks here. We're close to Bloor. We're close to Dundas. We're close to that arts and culture, the restaurants wise. I really feel for the restaurants right now. But the restaurants that will eventually open back up, that we're very excited to get back to. You know, we embrace that culture wise. So yeah, there'll be people that leave, but you don't get the arts and culture. You don't get that social interaction that people crave and want to be able to walk to and have easy access to and everything like that. So again, more reinforcement of the different hubs in Toronto wise and the advantages. I'll touch on this next point, Kyle, but I'll let this segue into you talking about the supply side. So another massive thing that people have to look at, and this is when we look on the macro level and the worldwide, we cheap and still boring relative to the world. And what I mean by cheap wise, because of everything that's gone on, our currency has taken a big hit. We're down to about 70 cents on the American dollar right now. So when people are looking from the international community wise and looking at Canada and Toronto, again, things haven't changed. Toronto's still Toronto, most multicultural city in the world. Every ethnicity, every culture wise has a home here. And that has changed. And arguably we're better off in regards to as a destination wise, because people looking at it going, oh yeah, like Canada, you know, did have some good leadership throughout this. We are definitely going to make that our new home now. We look at their public health model and everything like that. We're very happy. We're gonna make that our home. Oh, my currency. When I look at my currency versus other countries, man, this is extremely affordable wise for me to bring my family to, for me to invest my money in. I'm gonna invest here. So the currency is massive. Not on the local level. You're not going to see that on a local level because day to day means nothing to you. But people from the outside looking in, the currency going down, that's a huge positive for them to invest their money here and to bring their families here. And on the boring side, we've said it how many times, Kyle? We said it. Canada's safe and boring. And if you're coming from another country, safe and boring is what you want for your family and for your investments. That's why they're coming here. So we're still boring and we're on sale because our currency is down. So I'm going to let this come in. And why don't you talk about more about the high-tech sector, the supply issues that are still going to exist and everything like that, Kyle?
Yeah, definitely. So for the currency, just adding on to that, that's going to be a huge push on the demand side of things from those people, you know, outside. And it's really going to drive that demand piece. Now, on the flip side of things, for new developments that are trying to build buildings, they've suddenly had their costs increase significantly. They have to build their supply.
I'm gonna jump in 1 second. I gotta educate everyone on one thing when we talk about currency wise. Our average level of currency to the American dollar is 80 cents to the American dollar. So we will always go back to historic norms wise in regards to that. So I just wanted to let everyone know. So that's how we know that there's built-in appreciation there. So, but on the flip side, Kyle is going to continue on.
Yeah, exactly. Thanks, Alex. And on the flip side, supply, the Canadian dollar going down means everything is going to be suddenly more expensive. To buy concrete, steel, everything that they need to on large volumes, it's typically in US dollar currency. So everything has now gotten quite a bit more expensive for builders. So you might say, oh, there's low interest rates, they can take out loans. That's actually going to benefit the demand side. So, our clients who are buyers, that you're going to be able to get ultra low mortgage rates. But for builders, they've actually financed their buildings before, and now they've had to carry those costs for a longer period of time, which are going to increase costs as well. Touching again on the construction side, you're not able to fit as many people on a construction site anymore because of physical distancing requirements that are going to continue for the foreseeable future. That means construction is going to take longer and it's going to be more spread out, which again is going to increase the costs for new construction. Also, there wasn't a whole lot of pent-up demand beforehand for new construction. The market was meeting the requirements, reasonably well. But now there's been a lot of people on the sidelines that do now want to buy the pre-construction. Pre-construction has not shut down. They have been continuing to sell their inventory. You are able to do everything virtually, and that has continued during COVID and will continue as well. Typically, you can get private showings as well if you really require that. And of course, following all the social distancing requirements.
Go ahead. Keep on going.
Yeah.
Sorry.
Another thing that is really going to affect the market is the zoning and building regulations and getting approvals. Because just like most businesses, they've shut down, and now there's been a huge backlog, which was already an issue. So zoning and compliance and getting all the approvals you need to is going to just stretch out further because now there's a backlog of projects and things that you need to do. So that's going to slow the demand that's coming to market as well. And again, what's that going to mean? Prices are going to go up. And that's what we're hearing from the developers is you're not going to get a deal on the price. You might be able to negotiate some payment flexibility, but that's about it. You're not going to see huge incentives.
And even on that payment flexibility wise, that'll only be with buildings that have already met their financial requirements as well. That may have some existing supply left. Anything new coming on probably won't have any real massive payment flexibility wise. And the reason for that is that those buildings have to meet their financial requirements to get their construction financing. So it's their construction financing, the banks, that outline how much deposits have to be collected. So that's something important as well. On top of that, builders will not reduce their prices. We talked about that in regards to their costs that are going to be going up in various things. But they also have the ability to wait. So if they're not going to get their prices, their pro forma is not going to work. So they're not going to build something at a loss. So they'll just wait until the market comes to them and when that comes. So we'll probably see a slowdown in regards to the number of launches that are coming out because the builders aren't making the numbers that they need to make the projects financially viable. And then talk about financial viability wise, there are going to be a lot of cancellations this year, believe it or not. So we've talked about cancellations before. Now, there's going to be more cancellations. If you bought a condo in 2017 and the building has yet to break ground, there's a strong possibility that project will now be canceled, just with the reality of the market. And again, we talk about pro formas wise, and if the financial numbers don't make sense, the builder is going to cancel the project. And I've talked to professionals, again, lots of meetings with developers, experts, and they predict that number to be 2,500 units will be canceled this year. So that's going to affect the supply side. On top of that, on the supply side, Kyle brought up the new COVID safety measures. Building is going to slow down. We've talked to construction managers and what they've had to implement on their sites, and 100% there's going to be a slowdown. We've talked about on the city level in regards to the city processing applications and even getting buildings ready for occupancy. Those have slowed down. So the number of completions, and that's the most important thing. The number of units sold is never the important number. The number of completions in a given year, that's actually what comes on for supply side wise. the number of completions will decrease this year. So we were actually expecting a bump in 2020. We're actually going to see a decrease in the number of completions that were expected, which is also going to impact the supply coming online, which is a good thing. Well, when we have actually a demand issue this year in regards to buying and leasing side in the short term wise, those completions will be spread out more into 2021. On top of that, talking about expenses for builders wise. So right now, government policy has been focused on treading water. Okay, so it has never been done before, and this is an area we don't know. They've literally shut down the economy. This has not been done before. The next step will be, you'll see stimulus projects starting coming up. And that's where the government is looking for shovel and ground opportunities, infrastructure projects wise, that they can invest in and start getting construction ramped up right away. I just said construction. So we're going to have infrastructure construction coming online as soon as possible to continue helping the economy run. Subway projects, highway projects, all those different building projects. That takes trades away from the condo development industry and creates more competition and for those trades. Before this all happened, there was a supply issue, a labor issue for the amount of qualified trades. Moving forward, we're going to have all these construction projects coming online from infrastructure wise. We're still going to have a labor shortage in regards to the amount of trades. So that's going to impact the costing for developers moving forward as well. So things that are going to impact in the future wise. And again, if the market doesn't have an appetite for the pricing that builders need to sell their units for, then they're just not going to sell their units. And that's going to, again, decrease supply and put upward pressure on future pricing wise, because there'll be supply issues. So very, very, very important things to think about all moving forward. And ultimately, we've said it before, this is all short term. It just depends on how you define short term. Short term, really for me, short term's over the next year. Short term could be I would say short term for me would be up into spring 2021. Those are your short term. That's my short term window wise. This can only we may see things get more normal in the fall. I don't know when it's going to be, and we're not going to give you information that we don't know. But I know in the medium to long term, things are great. And one other thing that I want to bring up, we talked about interest rates wise, and I reached when we saw these stimulus packages start getting doled out. First thing that came to mind was inflation. Okay, they're printing money. What are my inflationary impacts on this? Because if you print more money, the idea is that, okay, well, if you're printing money, your counter effect is that you're going to have a rising costs. But what it is you're just replacing money that was already there. So what I mean replacing money, you shut down the economy, so you took money away, and you're replacing that with just printing money. So your inflationary impacts on the short term will be muted. Now, if you had inflation issues wise with prices going up, your next countermeasure is to increase interest rates wise. But we have just seen massive amounts of debt rolled into our government institution wise. Canada is very well positioned to take on that extra debt wise. And because of all this extra debt in the world wise, you're not going to see interest rates going up anytime. I can't even say, I think Bill Morrison, my economics professor, said he couldn't give a time period when they're going to, but I think he said like over the next 8 years, we're not going to see interest rates go anywhere because of where we're looking at debt levels with the government and everything like that. So we can be relatively assured that our interest rates are going to remain low into the foreseeable future wise, which is positive for our real estate investment market. We're not going to see a shock to our interest rates wise. which are then going to increase our lending costs. That's something that's very, very good. And we're going to continue, and he also said, we're going to continue to see volatility in the stock market wise, which I think is a positive for the real estate investment world, because real estate's long and boring. And there are people that don't want to see volatility. They just want to know that their asset is growing at a sustainable rate, and that there's someone living in the unit that's paying down the cost. So positive things, I think, moving forward on the real estate world when I look in the medium and long-term wise. So all my fundamentals are the same. My fundamentals haven't changed. I just have a short-term problem. I just, when we look down on this, it'll be that, yeah, boop, boop, boop.
Flip that will say what happened. And
yeah, I don't know what I was drawing there, but anyways, it's gonna be it's gonna be a spike, a valley, and my fundamentals will play out over the long run. Yeah, do you have anything else to add, Kyle?
Just to recap, that Canada is one of the best countries in the world to live in, and is going to continue to be one of the best countries. Demand forces for real estate are going to be very strong and continue to strengthen as we get away from COVID-19. And it's going to continue to have significant supply challenges as well. So we believe real estate is a very strong investment for the long term.
Yeah, that's exactly it. So I think we'll end out on that, because if I go into my other topics, then we're going to go down some crazy rabbit hole. But I'm happy to, and Kyle's happy to go down that rabbit hole with you guys one-on-one wise. So if you're interested in reaching out and talking more about in depth about the market wise and things we've gathered from researching with experts around the world and many different economic policies and trends, reach out to us. We'd be happy to speak with you. And we want to see you we want to help you maximize your wealth, minimize your stress, build financial freedom and generational wealth. So we're back. Hey guys, we're back every week now. Back to weekly videos. They'll be this style. We're so excited to actually be back with our weekly videos. So we'll see you next week. Okay. Bye guys.
Bye.